Hello everyone and welcome back to TradeSmart. First of all, thank you all for the 1000 subscribes, you are amazing. To thank you for the support, we released a trading script on our Twitter account, so if you want to get that, don't forget to follow us on Twitter at TradeSmart224. Later on this week, I will make a video of it explaining everything you need to know, so stay tuned for that. Today I am going to show you a profitable trading strategy which only takes 2 minutes per day of your time. This is perfect for everyone with a usual job who doesn't have hours to spend for monitoring trades and looking for entries. First, I am showing you the strategy, the indicators needed and the rules. Then I will backtest the strategy 100 times so you don't have to, and you can get an idea of what you should expect from this strategy. At the end, I will show you the results with the equity curve and I will give you some optimization tips which you can try out. Before I show you the rules, if you enjoy my content and you want to support my work, don't forget to like, subscribe and turn on the notification bell so you won't miss my next video. Thank you. And with that said, let's get into the strategy. For this strategy, we are going to use the daily time frame of the Euro-USD pair, and we will only need 3 indicators. Let me show you those. First, you will need the stochastic, so type in stochastic. It's going to be a built-in, this one. The second one is going to be the 200 exponential moving average, so just type in exponential moving average, and it's going to be this one. And the last one is going to be the Supertrend, so type in Supertrend, and we will use this one. Now first, we have to set the EMA length to 200, so go into the settings and just set it into 200. For the Supertrend, we will change the settings. We are going to change the ATR period to 14 instead of 10, and we're going to change the ATR multiplier to 2. We won't change anything on the stochastic, it's going to be the default settings. And now, let's see a long entry. The rules for a long entry are as follows. First, you need the price to be above the 200 EMA. The second one is you need the Supertrend to be green. And third, you need the stochastic to cross up. Now let's see where we get an entry. If you take a look down on this price action, you see that we are above the 200 EMA. Here we have a green Supertrend, and now we just wait for a stochastic cross up. As you can see on this candle, we get a stochastic cross up, so it's going to be a valid long entry. For the stop loss, we are going to target the lowest point of this cross up and the last cross down on the stochastic. Now let's see where that was. We have a cross up right here, and we had the last cross down right here. As you can see, it's going to be on this one. So that is going to be our stop loss. Now for the take profit, we are going to set it to 1.5 times the risk. Right there. And as you can see, this one was a winner. Now let's take a look at another example. With this strategy, the easiest way to spot the trade entries is by only looking at the stochastic and the 200 EMA. So let's see where is the next opportunity we get. As you can see here, we get a stochastic cross up. Price is above the 200 EMA, and we have a green Supertrend. So it's going to be our next entry. For the stop loss, we are going to target the lowest point of the candle between this cross up and the last cross down. Now let's see where is the lowest point. As you can see, it's going to be on this candle. So we are going to target that one for our stop loss, and we are targeting 1.5 times the risk. Right there. And as you can see, it was a winner again. And now let me show you the short examples. For a short, as always, you will need to do exactly the opposite. So for a short entry, the price needs to be under the 200 EMA, the Supertrend needs to be red, and you will need to have a stochastic cross down. Stop loss placement is going to be the opposite, and the take profit stays the same. So let's see where we get a short entry. As you can see here, price is trending below the 200 EMA. We have a red Supertrend above us. So now we are only looking for a stochastic cross down. Let's see when that will happen. Here you have a stochastic cross up, so it's not an entry. But on this candle, you will get a stochastic cross down. It's barely visible, but if I zoom on it, you will see it. Right there. So that's going to be an entry. For the stop loss, we are going to check what was the highest point between this cross and the last cross. As you can see between these three candles, the highest point was this one. So we are going to put our stop loss right there and target 1.5 times the risk right there. And as you can see, it hit our stop loss, so it's going to be a loser. Now let's see another entry. Here you can see we have a cross up, but we need a cross down. On the next candle, we get a cross down. Price is under the 200 EMA, and we have a red supertrend above us. So this is going to be a valid short entry. We will target the highest point of the candles between this cross and the last cross. So if you take a look, you will see that this candle was the highest point between these three. For the take profit, we will target 1.5 times the risk. And as you can see, the price just hit it. So this one is going to be a winner. And with that said, let's see the 100 backtests. And the results are in. We had 44 winners and 56 losses, which brings us to 10% gain on the account, risking 1% per trade. This is an average result for a strategy like this. The purpose of this video is to show you that you don't need to spend hours every day to be profitable, as 99% of people have jobs or other responsibilities every day and they don't have much free time. Back to the results. This trading strategy backtest was done on the Euro-USD pair on a daily time frame with a risk to reward of 1 to 1.5. The time to complete the 100 trades was just over 3 years, which is actually very low for a daily time frame strategy. Of course, the profits can be increased by increasing your risk per trade, but I wouldn't recommend using more than 3% per trade. You can also trade multiple pairs using more daily time frame trading strategies. This way, you can potentially realize around 50 to 100% return per year, but I am not a financial advisor. Also keep in mind that this 100 backtest does not prove that we will get the same results on other pairs or other time periods. We can get more or less. You have to do your own research. Now, let's go over my optimization ideas quickly, and then we will take a look at the account balance graph. If you want to get more trades, you can increase your trade count by 6 times by using the 4-hour time frame instead of the daily. You can also try playing around with different risk-to-reward ratios to find the best one. As I was going through the trades, I noticed that it might give better results if I would have placed my stop loss to the entry candle lowest/highest point. And now, let's see the account balance graph. The account balance graph looks average for a strategy like this. One thing I don't like is that we went back to 0% gain on the account multiple times. On the other hand, each time we reached higher highs, which is a good sign. This should be improved to have more steady growth, although I think it would look better after 200 trades. And that wraps up this video. If you like my content and want to see more, don't forget to drop a like, subscribe and hit the notification bell so you won't miss any upcoming videos. If you have any trading ideas, drop it down in the comment section and I will check it out. As always, thank you for watching and see you in the next video.